Walk-Squawk morning rundown here, Monday, June 23rd. We did have some heat this weekend with some seeing 105 degrees reported in Nebraska and South Dakota. Greenhouse-like conditions possible as humidity and rainfall increase across Iowa and surrounding states. But don't tell that to the corn market as we were down 5.5 before the biscuit halt here. Week 2 forecast, normal temperatures and precipitation in the Midwest wide. So that Drancho event in North Dakota caused some damage to grain facilities. You were seeing some pictures on Twitter of some silos, a little damage. So there's some problems, but like I said, don't tell the grain markets as wheat's down 6 cents here as we went into the biscuit break. No lasting heat dome. Rains keep pressure on corn and beans. You saw corn open a little bit higher this morning with crude oil rally, but quickly reversed lower. December corn still clinging to recent lows. Managed money still estimated to be short a little over 150,000 contracts. Open interest dropped sharply Friday, down 10,000 contracts on July option expiration. Gulf fertilizer prices surged 16% last week. Bearish weather and technical tone remains in corn. Now, soybeans. Soybean oil lifted briefly by energy, but soy complex largely unmoved. November beans took out May highs last week, a bullish technical breakout, but failed to hold above. Strong crush margins remain supportive. Weekend heat moves east. Rains this week could stall bulls short term. Broad crush remains a key upside driver. Last but not least, let's talk about wheat. Last week's breakout turned trend bullish on charts, but you know what? Is that tsunami of short covering over? Ongoing SRW harvest pressure earlier this week with some weather-related delays in Kansas. Drought monitor winter wheat 14% and HRS at 22%. Egypt looking to diversify wheat sourcings, less Russian wheat, eyeing Gulf trade hub with Russia and Bahrain. Ukraine wheat exports down 14% year on year. So we're going to get the COT data too today. That was delayed from last week's holiday. Funds are still likely to be net short corn and recently trimmed those wheat shorts there about that tsunami. But that was a little bit after Tuesday's reporting. So we probably won't even catch that until next week. Crude oil started, Sunday night strong on Operation Midnight Hammer, but gave up most gains. WTI currently 74 even under that $75 a barrel mark. Goldman was saying that we kind of had that $10 risk premium baked in to crude markets that we did last week. So without a real closure of the straits, we probably, wouldn't impact it so great. So all eyes are still on Iran to see how we can do this. Markets see if U.S. strike on Iran is just a one-off, not a broader escalation yet. Until Iran retaliates directly at U.S. assets, upside in grain energies could be capped. Related policy story, Trump targets green tax credits. Was kind of hidden in this social media burst of Midnight Hammer was the kind of a post maybe a little bit targeted at 45Z. Trump's Truth Social blast slamming green energy incentives could spell trouble for Section 45Z clean fuel credits. 45Z supports domestic low carbon fuels, ethanol, renewable diesel, sustainable aviation. Trump may oppose or repeal this. Is kind of what we're thinking. Market risk policy reversal could reshape margin outlooks for U.S. renewable producers. That's all I have for us on our Monday morning rundown.